I mean, clearly there is a lot baked into the valuation, but I want to focus on, the net new ARR, which is a metric that software companies are measured on. And when you compare Palantir's commercial segment revenue, which everyone is excited about,
Sure.
their total deal value that's remaining is around 2.8 billion. The new ARR increased by 500 million. Contrast that with a Microsoft or a Google Cloud. Microsoft added almost 9 billion in net new ARR this quarter. And they talked about, AI being used across 100 million Microsoft Copilot users, 20 million GitHub Copilot users. So from that perspective, Palantir's increase in remaining deal value of 500 million looks pretty small. I mean, Palantir's overall revenue run rate is 4 billion. Microsoft clearly is, a company that's almost 100 times or 80 times more bigger than Palantir. But it just goes to show that even on a net new ARR basis, Microsoft is adding more revenue per quarter than a Palantir is, and still people are very excited about Palantir's prospects. And to my mind, clearly, they have a product that is appealing to a certain section of enterprise users, but at this valuation, I mean, they can't sustain that for the next 30, 40 quarters, which is what they need to show to grow into the valuation. And I just don't see from a product perspective, they'll have the same kind of appeal as a Microsoft Copilot or a Google Cloud or, any of these large companies.
Dumb question of the day. How do you guys value this thing? I mean, I got it at like 200-300 times earnings, so that's not the way to go.
So we've seen that with, new IPOs. When they come to the market, they get a premium multiple. They get traded at, 30, 40 times sales. Snowflake, which is a competitor to Palantir, when it went public, it traded at 60, 70 times sales. Look at where the stock is now. It's flat since the IPO. Even though the company has grown top line at 30, 35% CAGR, the stock is flat. So that's what I mean by growing into the valuation, because there is so much embedded in that upfront multiple that even growing at 30% is not enough. Palantir really needs to grow at 50% to be able to show any sort of stock return from this point on.
Can it do that?
No, I mean, that's why I said I compare the product.
Yeah.
My initial comments were around comparing Palantir's product versus other large enterprise software makers. And even, you go down the list, Salesforce, ServiceNow, Adobe, like these are much bigger companies. And they have compounded at 20% CAGR over the years because they had a seat-based or a consumption-based model. We don't even know what kind of a business model Palantir has. Yes, it's winning government deals. Yes, it's winning some enterprise deals, but we don't know how they account for that revenue every quarter. Is it a seat-based model? Is it consumption-based? We don't have that kind of visibility to their business model.